Hey everyone, it's Chris here, and today I want to explain to you why I just added Microsoft to my investment watch list for 2026. Simply put, in my opinion, the numbers are just impressive, and today I'll explain why. Now, I know most of you already love Microsoft. I do too, but the real question we need to answer is why Microsoft, and more importantly, why now? You see, even though the market kicked off 2026 on the right foot, Microsoft got off to a rough start, posting a 2.23% drop in just a few days. Now, does a 2% drop change the quality of the company? Absolutely not. But does it raise a broader concern about the stock's performance in the future? Yes, it does. At this point, it is a bit normal for all of us to feel a bit confused about Microsoft. Even the top analysts are scratching their heads right now. Half of them are screaming that this is the biggest opportunity of 2026, and the other half see storm clouds on the horizon. This is exactly why we're here today. To cut through the noise, look at the cold hard facts, and give you my clear perspective. And of course, to answer the million-dollar question, is it worth investing in Microsoft right now? Let's dive right in. Before we continue, if you want to build your financial future, make sure to sign up to Freedom 24 using the link in the description. By doing so, not only do you ensure you're using a trusted stockbroker, but you're also supporting this channel directly and completely for free. And I've got great news! The Freedom 24 offer has been renewed, and until the end of February, they're giving away up to 20 free stocks to anyone who has registered from October 1st onwards. And yes, each stock can be worth up to $800. All we have to do is deposit as much as we can to get the highest tier. And of course, enter the promo code we'll find in the description. So that's 20 free stocks, and there's absolutely no reason to miss out on this offer. Moreover, don't forget to drop a like and leave a comment below. It really helps out a ton with the YouTube algorithm. And of course, if you haven't already, make sure to subscribe to the channel and hit that little notification bell so you get updated every time I drop a brand new video. And as always, let's hear it from the daily disclaimer. I am not a financial advisor or legal expert. All opinions expressed in this video and on this channel in general are exactly that, just my opinions, and they are intended for entertainment purposes only. Please do not take financial or legal advice from a random guy on the internet. Always do your own research. Let's look at the track record first. Over the last few years, Microsoft has delivered massive gains to investors, and nobody can dispute that. Specifically, if we zoom out to the last 10 years, Microsoft has posted a total return of 900%. This is about 26% average annual return. Incredible. It absolutely crushes the S&P 500, which has also posted an excellent 15% average. In other words, up to now, Microsoft has been an absolute money printing machine. However, in 2025, despite posting a solid 16.4% return, it actually fell short of the S&P 500, which returned 17.4%. And yes, as we can see, only two of the Magnificent Seven ultimately managed to beat the market in 2025. My beloved Google and the one and only Nvidia. In fact, Google went absolute supernova with 65% return for 2025. So evidently, I was spot on a few months ago when I said Google was massively undervalued. For those new here, Google is a significant chunk of my public portfolio, with my total investment now exceeding 22,000 and my gains reaching 150%. Now, if you've been around for a while, you know that Microsoft and Google are eternal rivals. And while Microsoft was historically the bigger heavyweight, the script flipped in 2025. Google overtook Microsoft in total market cap, officially becoming the third largest company on the planet. Hats off to Google.
Hold on, Chris. Are we talking about Google or Microsoft today?
You're right, I got carried away. Back to Microsoft. The stock is currently a battleground among analysts. Half of them claim it's an investment gem for 2026, and the other half call it a value trap. And the main reason for this tug of war, the elephant in the room, OpenAI, the company behind ChatGPT. For context, Microsoft has poured more than $13 billion into OpenAI. Now, here's where it gets interesting. After OpenAI's restructuring from non-profit to for for profit, Microsoft officially owns 27% of the company. With OpenAI's valuation estimated at $500 billion, Microsoft's stake is now worth $135 billion. Yes guys, you heard that right. Microsoft investment has 10x in just a few years. So far so good, right? Well, here comes the problem. The circular agreements OpenAI has entered into. They have promised to invest over $1.4 trillion at a time when their revenue was only $13 billion in 2025. And the math ain't nothing. We are a bit off, like more than $1 trillion off. As a result, more and more investors are starting to lose confidence in OpenAI. And naturally, the fear spills over to Microsoft, their biggest backer. Got it? It's not that something is fundamentally wrong with Microsoft itself, as we'll see in a minute. It's that the OpenAI relationship carries massive risk, and that is acting like an anchor dragging the stock down. And here is my take on this. I may not trust OpenAI CEO Sam Altman, but I have immense trust in Microsoft CEO Satya Nadella. In my opinion, he is hands down one of the best CEOs to have ever walked this earth.
Alright, Chris, that's all great, but is Microsoft actually a quality company?
To answer that question, we need to put Microsoft through the ultimate 7-filter test. Now, let me tell you, very few companies manage to survive our 7-filter test. So let's see if Microsoft has what it takes to make the cut. Here we go. Revenue growth over the last 5 years. Check. Net income growth over the last 5 years. Check. Free cash flow growth over the last 5 years. Check. Assets versus liabilities. We see that Microsoft is sitting on more cash than debt, which is why it has negative net debt, basically a cash surplus. So check. Reduction in shares outstanding. The company is steadily buying back its own stock. So check. Dividend safety. Is the dividend covered by free cash flow? Absolutely. In fact, free cash flow is growing even faster than the dividend itself. So check. And finally, return on invested capital, ROIC, we want it above 9%. Microsoft is coming in at a massive 24%. Big fat check. In simple terms, Microsoft saw our test coming and basically said, hold my beer. The company crushed all 7 filters easily, proving once again just how strong of a company it is. So now that we've established that Microsoft is undeniably one of the highest quality companies in the US, we need to answer our million-dollar question. What can we expect from the stock in the future? Digging a bit deeper, we quickly realize that Microsoft is anything but a simple company. It is a giant housing multiple money-printing machines under one roof. Today, we are focusing on its 3 most critical segments, at least in my opinion. Azure, the cloud, Microsoft 365, and LinkedIn. Let's start with a heavy hitter, Azure. Azure is the crown jewel here. It is Microsoft's main growth catalyst and, of course, the beating heart of its AI strategy. It's not just cloud storage. It's the platform running the critical infrastructure for businesses, governments, and organizations worldwide. And yes, it is in a brutal head-to-head battle with AWS from Amazon and GCP from Google, the 2 other tech giants sitting in my portfolio. Now, check this out. Even though Azure is currently number 2 behind AWS, it posted the fastest growth of the 3 over the past year. An impressive 39%. Why? 2 words. ChatGPT. Since ChatGPT runs mainly on Azure, the AI boom is fueling its growth directly. Another genius strategic move by Microsoft's CEO. So yes, Azure is undeniably the engine that will drive the company forward. That's point number 1. Moving on to Microsoft 365. I can hear some of you rolling your eyes.
Come on, Chris, give me a break with that dinosaur.
But hold on. This dinosaur is the spine of the corporate world. It's the stable pillar the entire ecosystem rests on, with over 100 million monthly active users. Think about it. Windows dominates global business, and Microsoft 365 is deeply rooted in the daily workflow of almost everyone. In financial terms, we call this stickiness. It is one of Microsoft's widest and deepest economic moats, simply because the switching cost is too high. Good luck trying to get an entire company to stop using Excel. And with the integration of Copilot, that grip is only getting tighter. And the numbers back this up, with revenue in this segment climbing steadily. So that's point number 2. Now let's talk about Microsoft's most misunderstood misunderstood asset, LinkedIn. In case you missed the memo, yes, Microsoft owns LinkedIn. And it's not just a social network, it's the world's largest professional database with massive daily engagement. This is a textbook example of network effect mode. When companies need talent, LinkedIn is the undisputed go-to platform. And that dominance translates directly into massive recurring revenue. That's point number 3, guys, and case closed. In my opinion, Microsoft has a very bright future. We could sit here for another hour also discussing cybersecurity and gaming. Don't forget who owns Xbox, both of which are absolute cash cows. But I think you get the point. Microsoft is a very high quality company. But that brings us again to the million-dollar question.
Is Amazon stock a good investment right now?
Because you can definitely be a great company without being a great investment. For Microsoft to be a great investment, we need to be able to buy its stock at a fair price. So let's move on to the valuation. Let's figure out what Microsoft is actually worth, at least in my opinion, and see if the market is offering us a discount. Right, it's time to crunch the numbers. Let's run the stock through our DCF model. This helps us determine the company's fair value today based on its potential future earnings. Taking into account analysts' earnings estimates for the next 5 years, here's what the model spits out. As you can see, even using extremely conservative assumptions, investing at today's price could yield an average annual return of 17% for the next 5 years. And remember, that is without even counting the dividends. Yes, our model gives us a 5-year target price of $1,035, while the stock is currently trading at just $472. That gives us a massive margin of safety for our investment today. Now, reality check. I want to make one thing crystal clear. Nothing guarantees that Microsoft will actually hit $1,035 in 2030. Past performance does not guarantee future results. And when investing, nothing is certain. The $1,035 price tag is simply our estimate of the stock's potential. That said, we are not alone in this view. Morningstar analysts seem to agree with our assessments, viewing Microsoft stock as undervalued at current levels. Oh, and let's not forget, the company generates a ton of free cash flow every single quarter, and it returns a huge chunk of it to us investors either by paying an ever-growing dividend or aggressive share buybacks. And it still has plenty of firepower left to grow the business. So the verdict, according to my analysis, Microsoft looks like a highly attractive opportunity right now, and it is definitely going straight onto my watch list. Honest truth, if I didn't already have significant position in its competitors, Google and Amazon, I would definitely be hitting the buy button on Microsoft today. So to make this as specific and practical as possible, for those of you looking to invest in Microsoft, its stock, ticker symbol MSFT, is available on Freedom24, which is today's video sponsor. And for those of you who want to see step by step exactly how we invest in Microsoft, the process is super simple. We sign up to Freedom24 using the link in the description, we go to the web terminal, we type MSFT, we hit buy, and we got it. So if you want to build your financial future, make sure to sign up to Freedom24 using the link in the description. By doing so, not only do you ensure you're using a trusted stockbroker, but you're also supporting this channel directly and completely for free. And as we mentioned, we have great news. The Freedom24 offer has been renewed, and until the end of February, they're giving away up to 20 free stocks to anyone who has registered from October 1st onwards. And yes, each stock can be worth up to $800. All we have to do is deposit as much as we can to get to the highest tier. And of course, enter the promo code we'll find in the description. So that's 20 free stocks, and there is absolutely no reason to miss out on this offer. And as always, if you want to get my take on the markets every morning directly in your inbox, make sure to subscribe to my newsletter through the link in the description. This is market analysis that never makes it onto YouTube, so yes, go subscribe to my newsletter, it's free. So thank you guys for watching this video. I really hope it helped you out, and I'll see you in the next one.